Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. This is part 1 of Sentiment Analysis for Investors: How to Gauge Market Emotions Effectively. Sentiment analysis in investing, a modern approach. Ever wonder why certain stocks soar while others plummet, even when the numbers don't add up? The answer might lie in market sentiment. In the investing world, it's not just cold, hard data that drives decisions. Emotions, perceptions, and public opinion play a huge role. Enter sentiment analysis, a powerful tool that helps investors gauge the mood of the market by analyzing news, social media, and financial reports. Understanding sentiment can be a game changer for investors. It helps predict market swings and guides smarter decision-making. Whether you're a seasoned trader or a curious newbie, grasping the impact of sentiment analysis could mean the difference between a savvy investment and a missed opportunity. Stick around to learn how this insight can sharpen your investment strategy. Understanding sentiment analysis. Ever wonder how investors gauge the mood of the market? Sentiment analysis dives into the emotions and opinions embedded in data. By decoding human feelings from a sea of information, it helps investors make informed decisions. Let's break down what sentiment analysis is and how it came to be. Definition and scope. Sentiment analysis, sometimes called opinion mining, is like having a magnifying glass for emotions in data. What does it look at? A wide range of text sources, including social media posts, news articles, blogs, and forums. Its main job is to determine if this information is positive, negative, or neutral. Why does this matter? Investors use these insights to predict market trends, gauge public opinion, and make smarter financial decisions. Imagine trying to determine the weather without a forecast; it's risky. Similarly, sentiment analysis helps hedge against uncertainty in the investing landscape by offering a clear snapshot of public sentiment and reactions. Historical context. The roots of sentiment analysis stretch back to the early days of natural language processing, NLP. It began gaining traction in the late 20th century when computers started understanding human language. Initially, it was simple, feeding computers strings of words and asking them to tell us what they mean. However, the journey from basic word counts to understanding complex human emotions has been nothing short of revolutionary. 1980s–1990s. This era focused on rule-based systems where computers relied heavily on predefined sets of rules. Although helpful, these systems were limited. Early 2000s. With the growth of the internet, more data became available. Sentiment analysis advanced with the use of machine learning, helping computers learn from examples over time. Recent years. The rise of big data and artificial intelligence has turbocharged sentiment analysis. Modern systems are more sophisticated, incorporating deep learning and neural networks to understand nuances in language better than ever before. Human language is intricate, with sarcasm, slang, and cultural differences all adding layers of complexity. But as technology progresses, the ability to decipher these complexities improves, making sentiment analysis an indispensable tool in the investor's toolkit. In sum, sentiment analysis may be technical, but at its core, it's about understanding the heartbeat of the market. It's like reading between the lines of human communication to predict where the winds might blow next. Sentiment analysis techniques. Understanding how people feel about the stock market can greatly impact investment decisions. Sentiment analysis uses various technologies to interpret and quantify these feelings. Below, we dive into the different techniques used in sentiment analysis, from the basics to the cutting-edge advancements. Natural language processing, NLP. Natural language processing, or NLP, is the backbone of sentiment analysis. It involves teaching computers to understand human language. This includes tokenization, breaking down sentences into words or phrases. Part-of-speech tagging, identifying whether a word is a noun, verb, etc. Named entity recognition, recognizing names of people, places, or brands. Key algorithms like naive Bayes and support vector machines help process these components. Modern models like GPT, Generative Pre-trained Transformer, use vast datasets to better understand context and sentiment nuances. Machine learning approaches. Machine learning techniques make sentiment analysis smarter and more accurate. These techniques learn from data to predict outcomes. The main types are: supervised learning, involves training on a labeled dataset. The algorithm learns from examples, making predictions on new, unseen data. Think of it as having a teacher guide the learning process. Unsupervised learning works with data that doesn't have labels. It's like letting a student learn without a teacher, finding patterns and insights independently. Each approach has its strengths. Supervised learning gives structured results, while unsupervised learning provides flexibility and varied data. Deep learning models. Deep learning models represent the new era of sentiment analysis. These advanced systems are inspired by neurons in the brain. Some leading models include LSTM, long short-term memory. LSTM networks excel at remembering information over long sequences. They're like a sharp memory, perfect for understanding context in reviews or tweets. BERT, bidirectional encoder representations from transformers. BERT reads text in both directions, capturing detailed context. It's like having a conversation where you listen and consider all the words around you, not just the order they came in. By utilizing these models, sentiment analysis can grasp complex emotions and tones, offering insights that traditional methods might miss. These deep learning tools are shaping the way we understand investor sentiment today. Applications of sentiment analysis in investing. When it comes to investing, knowing what the crowd thinks can be just as crucial as understanding financial reports. Sentiment analysis dives into the feelings and opinions of people, providing investors with insights that numbers alone might not reveal. From predicting market trends to managing risks, and even kickstarting trades, sentiment analysis has become a powerful tool in finance. Market trend prediction. Ever wonder how investors seem to predict the market's next big move? Sentiment analysis peeks behind the curtain by examining how people feel about stocks and the market. By scanning articles, social media, and news updates, it helps investors gauge public opinion and its potential impact on stock prices. Reading the crowd. If public sentiment is rising about a company, stock prices might follow suit. Conversely, negative buzz can signal a downturn. Staying ahead. Investors can adjust their strategies based on changes in sentiment, allowing them to capitalize on emerging trends or dodge potential pitfalls. Think of it as having a telescope that lets you see a storm or a sunny day coming on the horizon. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.